We are officially at red alert. Stop looking at the 5-minute charts. Stop looking at the RSI. Stop looking at the noise. What is happening today, January 6th, 2026, is not a market correction. It is not a healthy pullback. It is not a trading opportunity. It is a war, and today we have received the first official confirmation that the western front of this war is collapsing. Welcome back to Veiled Wealth. For years, we have been the resistance. We have been the ones shouting into the void, telling the world that the price of silver was a lie, that the vaults were empty, and that the banks were naked short. They laughed at us. They called us conspiracy theorists. They told us that silver was a pet rock, and that we should just buy tech stocks and be quiet. But today, the laughter stopped. Today, the enemy didn't just blink, they surrendered. We need to talk about Bank of America. We are not talking about a small regional bank. We are not talking about a YouTube blogger. We are talking about one of the largest, most powerful, and historically most bearish financial institutions on the planet. This is the bank that has consistently shorted precious metals. This is the bank that has told its clients for a decade to avoid gold and silver like the plague. This is the Death Star of the market. And this morning, the Death Star lowered its shields and admitted defeat. Bank of America has officially capitulated. Let's look at the numbers they just put in black and white. For years, they told you gold was overvalued at $2,000. Now, their official target for the average price of gold is $4,538 per ounce. $4,538. That is more than double the old highs. That is a level that implies the complete destruction of the fiat currency system. And they went even further. They said that gold should no longer be a speculative hedge. They said it must constitute 20% to 30% of every single portfolio. Think about the magnitude of that shift. Traditionally, these banks recommend a 0 to 5% allocation to metals. To go from 5% to 30% is not an adjustment. It is a panic move. It is a realization that the other 70% of the portfolio, the stocks and the bonds, is in mortal danger. But if you think the gold call is crazy, wait until you hear what they admitted about silver. This is the kicker. This is the smoking gun that proves the squeeze is inevitable. Bank of America looked at the historical ratios. They looked at the geological reality. And they finally did the math that we have been doing for years here at Veiled Wealth. They admitted that silver is coiled to explode. They didn't give a target of 80. They didn't give a target of 100. They said that based on the 1980 ratio, they projected a target of $309 per ounce. 309. Let that sink in for a moment. $309. The bank that helped suppress the price is now issuing research notes with a target of 309. Why are they doing this? Or why now? Why, after years of bashing the metals, have they suddenly flipped the switch? They aren't doing it because they like you. They aren't doing it because they want you to get rich. They are doing it because they are trapped. They are looking at the same data we are looking at. And they see a catastrophe coming down the pipe that they cannot hide anymore. They know that the paper game, the ability to print infinite contracts to suppress the price, only works as long as there is some physical metal moving in the background to satisfy the delivery demands. But the physical metal is gone. In the same report, they quietly admitted the terrifying reality of the supply side. They acknowledged that global mining production is collapsing. They expect production to be down 2% this year. And it isn't just that the mines are producing less. It's that the cost to get the metal out of the ground is exploding. Energy costs are up. Labor costs are up. Equipment costs are up. The all-in sustaining cost, AISC, for miners has skyrocketed, meaning that at $70, many mines were barely breaking even. But at $300, the economics work. Bank of America knows that the price must rise to incentivize production, or there will be literally zero silver available for the industrial economy. They are prepositioning themselves. They want to be able to say, "We told you so," when the price goes vertical. They want to be on the right side of history when the squeeze happens. Even though they spent the last decade on the wrong side of the trade, this capitulation is the signal we have been waiting for. In every major bull market, there's a moment where the smart money stops fighting the trend and starts chasing it. That moment is today. When the biggest bear turns into the biggest bull, there is no one left to sell. The sellers have left the building. There's only a vacuum above us. And while Bank of America is looking at the charts and the mining reports, they are also looking east. They are looking at the real reason why the physical market has dried up. They are looking at the dragon that has just awoken from its slumber and decided to consume every ounce of metal on the periodic table. Because while the Western banks are writing reports, the Chinese government is taking action. We need to talk about the liquidity bomb that just detonated in Beijing. You cannot understand the panic at Bank of America until you understand the tsunami coming from the people as Bank of China. While the Western media is distracted by interest rate fractions and unemployment decimals, Beijing has just initiated the single largest monetary event in human history. We are not talking about a stimulus package. We are not talking about an infrastructure bill. We are talking about a liquidity injection so massive that it distorts the very fabric of the global economy. The numbers coming out of China this week are terrifying if you are holding dollars, but they are absolutely exhilarating if you are holding silver. Reports confirm that China has expanded its M2 money supply by 48 trillion yuan. 48 trillion. To give you some context, that is roughly double the entire M2 money supply of the United States of America. Think about the inflation we saw in the US after they printed just 5 or 6 trillion during the pandemic. We saw prices skyrocket. We saw housing explode. We saw the cost of living double. Now imagine a monetary bomb nearly 10 times that size detonating in the Asian market. But here is the critical difference. Here's why this time is different. When the US prints money, it goes into the stock market. It goes into Apple. It goes into Nvidia. It goes into financial derivatives to prop up the banks. And the Chinese aren't doing that. They are not printing 48 trillion to save their real estate developers or to pump the Shanghai stock index. They are printing that money with a singular strategic purpose: to convert worthless paper currency into hard assets before the system collapses. They are executing the largest wealth transfer in history. They are taking these newly printed yuan and they are deploying them like weaponized capital into the global commodity markets. They are buying oil. They are buying copper. They are buying pork. But most aggressively, they are buying gold and silver. They are essentially saying to the world, we will give you this paper that we just printed out of thin air, and you will give us your physical metal that took billions of years to form and millions of dollars to mine. And the West, in its stupidity, is taking the deal. The West is selling its gold and silver to China in exchange for fiat currency that is being debased at a rate of 48 trillion a cycle. This is the black hole effect we have warned you about on Veiled Wealth. China has become a gravity well for precious metals. This huge injection of liquidity means there is now an unlimited bid in the East. If the price of silver rises to $85, China will buy it. If it rises to $90, China will buy it. They don't care about the price in yuan because they can print infinite yuan. They care about the ounces. They know that whoever ends up with the most ounces when the music stops is the one who gets to write the rules of the new monetary order. So they are sweeping the shelves. They are draining the London vaults. They are draining the Swiss refineries. They are draining the COMEX. And this explains why the premiums are exploding. This $48 trillion wall of money is the force that broke the back of the short sellers. Bank of America saw this M2 number. They ran the simulations. They realized that no amount of paper shorting in New York can stop a 48 trillion buying spree from Beijing. If JP Morgan sells 1 billion ounces of paper to suppress the price, China will just print enough yuan to buy all the physical metal that those paper contracts represent. The shorts are bringing a knife to a nuclear gunfight. We need to talk about the specific position that the Western banks are stuck in. We need to look at the other side of this trade because while China is long everything, the banks are short everything. And the size of their short position is not just dangerous, it is mathematically impossible to cover. Let's look at the death trap. Let's look at the 4.4 billion ounces that are about to blow up the world. According to the latest analysis of the Bank Participation Report and the derivative books of the major swap dealers, the combined net short position of the Western banking system in silver is estimated to be 4.4 billion ounces. Now, big numbers often get lost in the noise, so let's contextualize what 4.4 billion ounces actually means in the real world. The entire planet Earth, every mine in Mexico, every mine in Peru, every mine in Poland and Russia combined, digs up approximately 800 million ounces of silver per year. That is the limit. That is the hard cap. You cannot print more ore. You cannot speed up geology. 800 million ounces. That is all we have. So do the division. 4.4 billion divided by 800 million. It is roughly 5.5. The banks have sold, on paper, 5.5 times the entire annual production of the human race. They are short 550% of the global supply. Think about the insanity of that position. In the stock market, if a hedge fund is short 20% of a company's float, we call it a crowded trade. If they are short 100% like they were in GameStop, we call it the mother of all short squeezes. But here in silver, they are short 550%. It is a level of leverage and recklessness that has no parallel in financial history. And here's the trap. They sold this silver years ago. They sold it at 20. They sold it at 25. They sold it promising to deliver metal that they do not have, believing that they could always crash the price to buy it back cheaper. But they didn't count on the Chinese liquidity pump. They didn't count on the solar chokehold. And now, with the price ripping through $80, they are underwater by an astronomical amount. Every single dollar that silver rises costs them billions in mark-to-market losses. If silver goes to the Bank of America, target of $309, the losses aren't just painful, they are terminal. They are extinction-level events. But the money isn't even the biggest problem. The biggest problem is the physicality. A short position is, by definition, a promise to deliver. When you are short, you owe someone metal. Today, the counterparty isn't a speculator. The counterparty is China. The counterparty is the solar industry. The counterparty is the Pentagon. These entities do not want cash. They cannot build a solar panel with a check. They demand the physical bar. And this leads us to the most dangerous deception happening right now. Because the banks know they are trapped. They know the math better than I do. So what is their strategy? How do they survive this? They have only one play left. They have to trick you into giving them your silver. They have to create a fake price on the screen that looks high enough to tempt you to sell, but is actually a massive discount to reality. They want you to look at $80 and think, wow, I'm rich. I should cash out. Do not fall for it. We need to talk about the $80 trap. We need to expose the difference between the number on your monitor and the real value of the metal in your hand. Because today, right now, the market has split in two. Right now, you're seeing the price hit $80 an ounce. And I see the comments, I see the celebration. People are high-fiving each other. But stop it. Stop celebrating. Because what you're looking at is not the value of silver. What you're looking at is the price of a paper promise on the COMEX Futures Exchange. And I am here to tell you with absolute certainty that $80 for a physical ounce of silver is trash paper. It is a lie. It is a manipulation. And it is a trap designed to steal your metal before the real move begins. Here's the reality test. Do not trust the chart. Trust the market. Pick up your phone right now. Call your local bullion dealer. Ask them to sell you a 1OZ American Silver Eagle for $80. Ask them to sell you a 10-Oz bar for $80 an ounce. Do you know what they will tell you? They will laugh at you. They will tell you, I'm sorry, but we have no inventory at that price. They will tell you that the real price, the price to actually hold the metal in your hand, is $90. It is $95. In some places, for premium coins, it is already over $100. This is the decoupling. This is the moment where the paper market and the physical market snap apart. The banks are using high-frequency trading algorithms to keep the paper price pinned at $80 because that is where they can manage their losses. They want you to look at $80 and think it is a great selling opportunity. They want you to dump your physical stack back into the system so they can scoop it up and cover their 4.4 billion ounce short position. They are fishing for liquidity. They are dangling a worm in front of you, hoping you will bite. But if you sell your physical silver today at $80, you are selling a winning lottery ticket for the price of a ham sandwich. Why is Bank of America talking about $309? Because they know that eventually this paper charade has to end. They know that eventually the paper market will shut down or cash settle, and the only price will be the physical price. And when that happens, the price won't slowly drift from 80 to 100. It will re-rate overnight. It will gap up to $150 in a single trading session. Even if the banks wanted to cover their 4.4 billion ounce short position, even if they printed infinite money to buy the metal, they have run into a problem that no amount of financial engineering can solve. They have run into the supply cliff. In that same report where Bank of America raised their target, they quietly admitted the most terrifying statistic of all. They admitted that global silver mine production is expected to fall by 2% this year. This is the inelasticity trap. The bankers think that if the price of silver goes to $100, the miners will just turn a dial and produce more silver. But a mine is not a factory. You cannot just turn up a mine. If silver hits $100 tomorrow, 0 extra silver will come out of the ground next week. It takes 10 years to find, permit, build, and operationalize a new silver mine. For the next decade, we are stuck with the supply we have. And the supply we have is collapsing due to grade degradation and rising energy costs. Bank of America knows that the only way to keep the lights on is for the price to go to $300. So we have the capitulation, we have the shortage, we have the fake price. What is the final verdict? What is the actionable advice for the investor standing in the middle of this battlefield? We need to crystallize this into a single undeniable call to action here at Veiled Wealth. The time for debate is over. The time for watching the market is over. The crash is here. And when I say crash, I do not mean the price of silver is going to crash. I mean the system is crashing. The mechanism that has allowed Wall Street to control the price of your labor and your savings for 50 years has finally snapped. The spread we are seeing today, the gap between the 80 paper price and the 100 physical reality, is not just an arbitrage opportunity. It is the death rattle of the fiat currency regime. You have to understand the psychology of what happens next. When those banks finally get the margin call from hell, when they are forced to cover those 4.4 billion ounces, the price will not go up by 10%. It will go vertical. We are talking about a move of 100% overnight. We're talking about waking up tomorrow morning and seeing silver trading at $150 and then $200 by lunch. So this is my final instruction to you. This is the go order for the resistance. Do not sell. I don't care if the screen says $85. I don't care if it says 90. Do not trade your sovereign wealth for their dying promises. Do not let them trick you into bailing them out. They are drowning, and they are begging you for a life vest. Do not give it to them. Let them drown in their own liquidity. Instead, if you can still find metal, if you can find a dealer who hasn't realized what is happening yet, or a neighbor who is asleep at the wheel, buy it. Buy the premium. Buy the scrap. Buy the junk silver. Clear the shelves because the window is closing. We are entering a period where silver will simply become unobtainium. You won't ask, well, what is the price? You will ask, is there any left? And the answer will be no. Bank of America has given you the target, $309. China has given you the catalyst, $48 trillion. The geology has given you the guarantee, production collapse. The universe is screaming at you to hold the line. We have won the argument. Now we must win the war. The Western Front has collapsed. The enemy has capitulated. The road to triple digits is wide open. Do not waver. Do not blink. This is the moment we prepared for. This is the transfer of wealth. This is veiled wealth. The alert is red. The target is locked.